Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Hello, this is the Friday, May 14, 2021 version of the Market Plus segment. Joining us now, Ted Seifried. Ted, I didn't mean to necessarily say your name like Newman. It just kind of came out that way, but I'm so glad that you picked up that that's what I was laying down.
Yeah, no problem.
I like how you can go along with whatever crazy idea we're going to have.
Hey, it's fun. This is why I like this.
I had a dry erase board under my chair. Did you have anything else under your chair?
No.
Okay, so spoiler alert, no corn hat, but we're going to talk a little bit about that. Before we get in any further, I just didn't quite get a chance to get cotton in before the bell. Cotton, it seems, we're buying acres, and now that we've got our acres, the interest is gone.
Right.
Is that what's going on?
A little bit. Yeah, and we've had a nice break off the highs, but we're right on trend line. I am optimistic that we hold and bounce back. Demand for everything is really rather strong, both domestically and globally, and I'm hoping that we start to see some stronger exports going forward.
Okay, well, the trend there on the screen dropping off a little bit. We'll see how that one shakes out. All right, we're going to start with a Twitter question. Ryan in Nebraska. He says, Ted, no one is talking potential above trend corn.
Right.
What is Deese corn at harvest if USDA starts projecting above and prevent plant acres are nil? So you mentioned somewhere between 2 to 3. There's a report 3 to 5 million more acres out there. Sure. Your number, you get to write a number. How many more million acres above what USDA said in late March do you think we'll end up with in the June number?
Oh, that's not the number. I thought the number was what's the price of corn.
You can do that one too. Fine. Let's answer. I
can do both.
Question
There's
first.
a lot of space here. So.
Okay. What's December corn at harvest if USDA starts projecting
number
above?
one. By the way, PP acres won't be nil. That's just not a thing.
It never happens that
right.
way.
So,
Somebody always has a problem.
But I get I get the point.
Yeah.
Like down sharply because they've been really high the last couple of years because of wetness and whatever. And how many acres for corn was that?
Yeah, that's my second question. Yeah, the follow-up to that. And the secret answer is?
Sorry, I'm trying to get it to be darker.
That's all right. Okay, so $4.85 is the price of December corn at harvest, off the combine. And you're saying that we're going to see 94.6 million acres of corn. What leads you to both of those numbers?
Well, the 485, I mean, look, we're taking a total shot in the dark here. We don't know what weather is. We don't know what acres are. We don't know really what demand's going to be. I mean, this is before the marketing season even starts. But that's just kind of what I would consider a rather normal price for corn, given a 1.5 to 1.8 billion bushel carryover in an inflationary climate where I think soybeans will be trading $14 plus. So that's kind of, or well, $12 to $14, I should say. So that's kind of where that comes from. But I mean, I'm assuming normal weather. I'm assuming basically trendline yield. I think he started that question saying nobody's thinking above trendline yield.
Right.
Well, that's because, there's dryness in the West and we have concerns going in. But look, we planted early. I'm not saying that's impossible. It would be a record by 3 bushels an acre. So, I mean, we're already looking for a record by 3 bushels an acre at trendline. I think that's why people aren't thinking, 181, 182. A couple of years ago, we felt like we were going to do that. And then last year, we thought we were going to do that. And then, Derecho and dryness in western Iowa. So, I don't know. The trade seems to definitely be leaning under on that number. But we certainly could be over. And it certainly could be a bigger than 2 billion bushel carryover for corn because of that combination of increase in acres and, which again, we don't know for a fact yet. That's just what everybody's speculating, myself included. But if you have those bigger acres and you put that together with a better than trendline yield and a new record by 4 or 5 bushel an acre, and China doesn't keep buying like they have the last 10 days, then, oh boy, you've got, you have a hard time justifying prices above $6, that's for sure, or even $5 for that matter, hence the 485.
Well, let's go back to the story we did in the main program about inflation.
Yeah.
Food is 15% of the consumer price index, roughly. Say corn, soybeans drop, farmer is upset, but the shopper maybe not, because maybe their food stays in line. Or, I'm not going to say collusion, I'm not going to say we're all working together on this one, food stays high, food stays strong, just because it can.
Yeah.
Is there a possibility that, I guess I'll ask the question from Ken in Michigan, as with Roger in Indiana, are the highs in corn and soybeans in, or are they yet to come?
All right, so you left a lot to unpack there, Paul. Let's start with saying this. For the moment, the U.S. consumer is okay at paying higher prices. And a lot of that is because we've thrown an amazing, just a tremendous, unprecedented amount of stimulus into.
Are they ready to pay it in food, though? We usually balk at paying it in food. We might buy a steak. We might have forgotten what the steak cost in the restaurant, but we're not going to pay higher food forever.
I don't know. Again, I think people are hearing the word inflation, 5-6 times a day. I think people are just understanding that this is a thing right now. But a lot of those same people got pretty handsome stimulus checks, and we're happy to spend it on whatever, right? So people have been paying. Now, that's kind of what my point was, is that if the stimmies stop, are people willing to pay the higher price food or not? And that's the question. I mean, I don't know. To some extent, you get kind of jaded to inflation, but at the other, if you don't have the same amount of money coming in as you did during COVID when you were unemployed and playing video games, do you go out and get Sizzler or do you go back to McDonald's? Either way, ground beef demand, that's good. But yeah, no, that is a concern. What happens 6 months from now if inflation is still rampant and yet we're not pumping stimulus into the economy, which is supposedly, that's kind of what the plan should have been or would have been or whatever. So we'll have to see. So that is a longer-term concern. But for right now, domestic demand for everything is really very strong.
Okay, let me make sure I get the answer to Ken's question.
Yeah,
are the highs in corn and soybean?
Okay.
Old crop.
I have. Ooh. Okay. Well, it's
start with old crop, and then we go to new crop.
But it's the same answer for both.
Okay.
They could very well be in for corn. It'd be very strange to see the highs in April, May for corn, but all things considered, I believe it's possible that they are. And it's really going to depend on weather. Now, we'll probably have a weather scare to get us back towards the highs here at some point. Whether we make new ones or not, I think will really depend on whether we have an actual weather deal or if China just decides to buy all the corn, which, by the way, I have reasons to think that could be possible too. But I'd be less surprised if the highs were in now for corn than I would for soybeans. As we've talked about, I really feel like there's more upside potential in soybeans. And I think you got a soybean question, so I'll save the soybean commentary.
All right, so Aaron in Ocheyedan, Iowa, another good question on Twitter. Can you, Ted, outline a case for all-time new highs this summer, but also a case for going back to $10 to $11?
Yes. And I like this question a lot because this is really the question we should all be asking, right? So I think the path to new highs in soybeans or potentially record highs in soybeans is really fairly clear. You talk about maybe we get 88, maybe 89 million acres of soybeans. If we have any problem with yield, let's say we're at 47.6, somewhere in that neighborhood, and demand is a little bit stronger than the USDA is suggesting, we're very much in a position where we have to price ration soybeans again. And you can see how this last year, going to 16.60, flirting with the idea of $17, didn't ration soybean demand quite as much as I think we had thought it would. Now, there's a big difference. We started at 8.80, right? So there was a long period of time where soybeans were really very cheap, and we sold too many of them to China for very cheaply. So we won't have that same scenario here. So it'll be a big test for demand. But if that demand is there and it's strong, as strong or stronger than it was last year, look out. There is definitely a case, an easy case to make for record high soybean prices. Now, is it likely or not? I don't know about that. I worry about demand for a number of reasons, but to this point, you don't have any major reason to go and say it can't be there. So we'll leave it at that for now. Back below $12. I think that's the less likely of the two. Whether above 14 or below 12. Now, by the way, we can get above and below both of them and still not finish there at harvest. But a sustained trade below $12 would take a couple of big events, or one or the other, or whatever. Demand destruction in a big way. we stopped doing business with China. China invades Taiwan, something like that.
You mentioned that, yeah.
Yeah, another one would be ASF everywhere, right? Or really big deal in China. Whatever reason, China either stops buying soybeans or we stop selling soybeans to China, that would be a big one. But there's another one, and that would be maybe we're surprised and we actually did get 2 million acres of soybeans and, end up with a 53 national average yield. And okay, we thought we were going to have razor-thin, tight margins, but we're actually at about a 400 or 380 million bushel carryover, which isn't great, it's not, abundant, but it's definitely a different story than what we're talking about right now. And that disappointment would probably push us back down, lower. So there are things that can happen to make it go either way, which is why we want to be managing price risk right now. When you have really fantastic profit margins, I want guys to be close to 40 to 60% sold on new crop soybeans at this point. Cash sales, and then we can use call options to replace the opportunity. Manage a risk by making sales, manage opportunity by call options or futures on the board. I prefer call options in this sort of volatile markets. But, again, you have to manage. Don't do nothing. If you're doing nothing, you're really leaving yourself open to a tremendous amount of risk that you really don't need to be.
Okay, I'm not asking you to answer the question